What's going on, guys? This is Aaron from Departures Capital. We're here with Brent Suen, President, Executive Chairman, and Director of Logiq. How are you doing today, Brent?
Very well, Aaron. Thank you.
Yeah, excited to have you on. So, Logiq is a global provider of e-commerce, m-commerce, and fintech solutions that help e-commerce businesses succeed globally. Can you tell us a little more about the company and its services?
Absolutely. So there are two distinct operating businesses of Logiq. There is AppLogic and there is Data Logic. The way that we describe both in very simple terms, very easy for investors to latch onto, is AppLogic is a Shopify for mobile, and I'll describe that shortly. Data Logic is like the trade desk, but for small to medium-sized businesses, which I'll also describe shortly. What those do essentially is AppLogic gets offline businesses online through a mobile device. On the other side of the business that we call trade desk for small businesses, Data Logic, what we do there is we help businesses that are already online, predominantly in North America, but we've also just launched into Europe and Asia, sell more and sell better. And what does that mean? That means advertising campaigns, marketing campaigns, lead generation, finding new customers, but finding them in a targeted way so you know exactly what you're spending your money on when you're advertising. But essentially, that's what we do. And when you wrap it all together, what is that? We call it simplifying e-commerce.
Very interesting. So Logiq recently joined the NEO Exchange in a $5.9 million IPO. What fueled your decision to join the Canadian market at this time?
It was a pretty easy decision to choose Canada for an IPO because it's the home of Shopify. And we were further attracted to the NEO when we were going around meeting different exchange representatives. And quite contrasting to the TSX, they have fewer listings and therefore you get more attention. However, they are a tier one global exchange along the same lines as the TSX. And so it was an easy and good decision to do so. We do operate in Canada and in the US on the Data Logic side of the business, but for the most part, I mean, we're global. So listing in Canada to us was still listing on a home market.
Great. So what differentiates you from other companies in the e-commerce marketing space?
Sure. Okay. So the two business units, AppLogic and Data Logic. AppLogic, what differentiates us is, again, if you look at companies like a Shopify or Wix or BigCommerce, they are all desktop and laptop based. So you don't find them in emerging markets. For that matter, in most emerging markets, you don't really find many companies that do what we do. Now, I'm not saying we don't have competition there. There are other DIY apps and app kits, but I would say that we're probably the only one that's publicly traded in North America that you can participate in as an investor. What's also different about us is that the emerging markets that we focus on are in very hot areas that have a lot of longevity in a thematic attraction for individual investors here in especially in the US, because there are currently 4 companies that are public here that have a focus in the same region we are. They're all larger. None of them have the Create app platform like we do, but they are all in various facets of fintech and e-commerce. And what you will see over the next year is probably another 15 to 20 of those companies coming public here and in Canada through a combination of IPOs and SPAC listings. So I think thematically, investors are going to see that happening, and that type of opportunity opening up gets people aware of it, and they say, all right, well, look at what happened with Chinese stocks, look at what happened with Indian stocks, look at what happened with other emerging market shares, and this is how we can participate. So that's the difference with AppLogic. With Data Logic, what's different is that the trade desk, which is listed here in the US, has about, I think, a $50 billion market cap. Their customers, their primary customers are the top 100 e-commerce companies in the world. So where are they? They're all here in the US. So, Amazon, Target, Walmart, eBay. If you look at the top 5, they represent 53% of all e-commerce. 5 companies, 53%. I mean, it's astounding, right? If you run a small business, if you're one of the other 500,000 e-commerce companies that has the other 47%, what that means to you is, gosh, these big enterprises have a lot of money to spend to out advertise me, to buy up all those keywords, to basically crush me business wise, because they are. I mean, it's that simple. Okay, so in order to be a trade desk customer or a Google DB360 customer or a meaningful customer to Facebook, you have to have a minimum monthly ad spend of $100 million. 100 million. And it's actually higher than that with the big 5, but there's got to be a better way. And that better way is the result of the 3 acquisitions that we've made in the past year to build what is now Logiq and the underlying platforms that make up for it. And what is that platform? Well, very simply put, it is a set of tools that enables small and medium-sized businesses to have the same access to ad tech. So keyword buys, multi-channel advertising, lead generation, all of these things. And, there's some buzzwords associated with it, but what is it? It's just advertising, but it levels the playing field for the small to medium-sized businesses to have access to the same opportunities that the big people do. And they do that through us.
Very interesting business. So Logiq is initially focused on growing its presence in the Asia Pacific. What attracted the company to this region, and what is the market opportunity there?
Asia wasn't hit as hard in the first .com bubble. So I transplanted the business there, spent a number of years investing in and advising investors into e-commerce businesses in Asia. And along the way, I was introduced to an opportunity based out of Singapore called Create App, which is essentially our core platform on the Logiq side. So we put that into a publicly traded vehicle, which, for better or worse, is on the OTC market prior to our Neo IPO. And we built that business up over 4 years, went into other markets, predominantly in Asia, Indonesia, Thailand, Philippines, Vietnam, and then North Asia as well, Hong Kong, and Taiwan. And so that's our entire Asia focus right there, also in a nutshell.
Awesome. So can you tell us a bit more about your digital wallet and food delivery services, PayLogiq and GoLogic?
Absolutely. So those platforms, those apps were built to give us a presence in Indonesia, which was our first big emerging market that we went into. And then secondly, refine those apps so that they could reside on a platform in any other emerging market, which we're also in the process of evaluating and looking at going into. Thirdly, by building out this portfolio of applications or apps, in establishing a foothold in interesting emerging markets, what that does for us as a company is it positions us to where large foreign consumer software companies, enterprise software companies, e-commerce, food delivery, fintech players looking to enter those markets can either make a strategic investment, strategic partnership, or an outright acquisition of those businesses from us. And so that was more about a positioning endeavor as opposed to a competitive endeavor. So what differentiates those? Our e-wallet was our first foray into Indonesia. We have a specific focus around micro to small businesses. If you look at our peers there, they tend to focus on more established, smaller to medium-sized businesses. And we try to go to some of the highly populous, but less lower income demographics outside the central business districts for the e-wallet customers. We currently have about 120,000 merchants in Indonesia. On the food delivery side, that is also representative of an app that we built to establish a presence and do something a little bit different. And what is that thing that's different? So, people typically have an hour for lunch. If you order food, as we do in North America from, say, DoorDash or Grubhub or Uber Eats or Postmates, it takes 45 minutes on average. It's no different in Jakarta, Indonesia. It's no different in Bangkok, Thailand. It's no different in Guangzhou. And how do you get around that? Well, most food delivery or ride sharing is done by scooter or motorcycle. So we took it a step further and we thought, okay, if that's still 45 minutes on average, is there a way you can cut down that time so people get a hot meal in a short period? So we did two things. We built a thing called a geofence, which is essentially when you have the app and where you are right now, if you look out your window, you know where the restaurants are near you, but you still have to go downstairs, go outside, walk down, order, bring it back. You go through the whole thing. Or if you use the app, you're geofenced. So only the restaurants within a 500-meter radius will be the ones that you can choose from. But those will be delivered to you by foot-based carriers instead of the scooter and motorcycle folks, because what you'll do is you'll get your meal in 14 minutes instead of 45. So you save the time, you've got the app, you can use the e-wallet to pay for it as well. So it's cross-pollination, and it was something to differentiate ourselves, and it works. We scaled up to 150,000 users in 2 months. Then COVID came around. It put a bit of a damper on things, but what we've done since Q1 of last year is we've gone after new partnerships and opportunities in Indonesia that, as things start to level off, because they're going through some pretty significant lockdowns now, but as things level off, we'll start to launch pilot programs on some pretty compelling things there that are just extensions of what we're already doing in the area.
Definitely. So Logiq has clients around the world, including thousands of small to medium-sized businesses, as well as some notable publicly traded Fortune 1000 companies like American solar panel provider Sunrun and marketing tech company QuinStreet. Can you tell us more about your major clients and how those relationships were formed?
Sure. It's interesting because if you look at the size of the two you just mentioned, and some of the other ones who are on our website, and some who are not, just due to non-disclosure concerns, they are very large to us, but they are smaller and quite small to some of their major competitors. So in their endeavor to level the playing field and compete better, when they found us, they've all done side-by-side evaluations. So they use their existing providers and then they run a program with us. They end up choosing us based on that. The analogy that we use about the trade desk and how, unless you've got $100 million budget to spend, that rules out 500,000 potential customers. And a lot of those 500,000 are still billion-dollar enterprises, but they don't spend $100 million a month. They don't even spend 10 million a month. So, how do they find access to things that help them compete?
Are there any near-term catalysts investors should watch out for in the coming months?
Yes. As you know, we've just completed our IPO on the NEO. Last year, when we evaluated during COVID, how can we scale up? It wasn't just on the business side. It was also, okay, what can we do on the stock side to look more like our peers? There were two things that stood out. One is our gross margin profile a year ago did not look at all like peer companies. We were at 13% gross margins, and looking around the universe, of companies that are in e-commerce enablement, they're usually 20, 30, 40% plus, which is why they carry big valuations. The other thing is we were only listed on the OTC market, and now we're on the NEO, which is a tier 1 global exchange. So the two catalysts I would say are gross margin improvement. We just reported Q2 a couple of days ago on Monday. Our gross margins right now are nearly 30%. So we've more than doubled them in a year. Okay. We've also publicly stated that will continue to increase. Okay. But the ad tech business that I described earlier, that we've just launched a month ago, where we're going after mid-size ad agencies, that actually carries 60% plus gross margins. I'm not saying that we're all of a sudden going to ramp up from 30 to 60, but that blended margin over the next few years is going to look a lot like companies like the Trade Desk that trade at monster valuations. So, what is that near-term catalyst? Well, we just reported the earnings, and people can see that we are clearly on track to improving margins. The recent IPO on the NEO has also attracted wealth managers, institutions, and high net worth investors who we've been talking to every day. And so as the story starts to get out, both organically and then certainly through channels like yours, people start to see, gosh, these guys are trading at 2 times revenues, and their peers are at 23.6 times revenues on average. So those are catalysts. And then I think the most important to look for is we have said that after the NEO IPO, we will look to uplist our OTC shares on either the New York Stock Exchange or the NASDAQ. But trading comfortably over 3, we can submit an application to a senior exchange. And I think that catalyst would absolutely bring much more attention to our shares.
Definitely. So last but not least, how can investors get in touch with you or find out more information about the company?
Certainly. So on our press releases and certainly on our website, we use CMA as our IR firm in the US. In Canada, we work with Hybrid. So anyone coming into you, you can certainly point them to our IR firms, which I'll provide to you shortly. As I mentioned to you prior to the call, we're looking to embark on some mini road shows in the near future. So we're very accessible. We do quite a bit of outreach, and that's going to ramp up significantly actually right now. So
great. Well, thank you so much, Brent. I look forward to covering your story. It's an exciting industry that you're in, and best of luck with everything.
Thanks so much, Aaron.
All right, guys, that wraps up the video. Thank you so much for watching. I just wanted to say, if you do support me, the channel, and all these videos, then kindly smash that like button along with hitting the subscribe button and the bell for notifications for future videos. I did also want to say, check the disclaimer down below. This video was sponsored by the company that we are talking about today. So check the disclaimer, full disclosure, and we're out of here. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.